We talked about futures contracts. By nature, the term future, it expires at some point in time. Sometimes they're physically settled, which means you make or take delivery. Sometimes they're cash settled, which just means when they expire, you get a debit or credit and they come off the books. So I think both you and I, just thinking about that now, which would I rather have? And it's very, if you're trading crude, you're not going to get 1,000 barrels of oil. The guy's not going to pull up and say, hey, where do I park this in your basement?
Listen, I live in Texas. It could happen. You never know, right?
This is the How to Trade Stocks Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Uhl. Today's episode is produced in partnership with FinClub.ai. Trade with confidence and leverage the power of artificial intelligence in your trading starting today. Go to FinClub.ai to get 2 free weeks of AI stock picks and save 15% when you use the code SAVE15. That's at FinClub.ai. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week.
Hey there, traders. Welcome back to another episode of the How to Trade Stocks Options podcast. Today, I've got a really special guest on the line, Pete Mulmat. He's the Chief Commercial Officer at the Small Exchange, which is part of the Tastyworks family. Pete, I'm really excited to have you on today. I think I've got a lot to learn from you, sir.
Hey, Chris, thanks so much for having me on. I've really been looking forward to talking with you, and this will be great. So thank you again for having me here.
For sure. Now Pete himself, he is a celebrity. He is an actual star on Tastytrade, and that's one of the very fortunate blessings that I've had to be on the show, is that I can network and talk to people like Pete and Tom and Tony and Dr. Jim, and just being able to collaborate with them. And Pete, one thing that I've really put into this podcast is I definitely feel, and this is one of my core principles, is collaboration over competition. And it just has opened so many doors for me. Instead of trying to compete with Tastytrade, let's work together with Tastytrade, right? It just makes it a lot easier for everybody. So Pete, let's dive into who you are, right? You've been around the block a couple days, I think. And, I'm sure that you can share with me and the audience out there, your background and how you got to become such a well-known figure with Tastytrade.
Well, thanks, Chris. Yeah, I was very fortunate. I started trading when I was 20 years old. I was still in college between my junior and senior year. Now, my dad was a cattle broker on the floor of the CME, and I started in FX. My grandfather was actually a pork belly trader. So I was kind of born and raised in it. So I was so fortunate to be able to start at 20 in a pit that, and here I'm dating myself, when there was a Deutschmark. So before the EU currency came around. And you know what? There was nothing better than when I started trading, there were 12 guys in the pit. And the busy day was 3,000 contracts, and everybody walked out like that your head was spinning. And by the time when I left the floor to move on to doing some creating a prop group, the pit was doing about 200,000 contracts a day, and there were probably 200 guys in there. So wow. The ability to grow into a new market and a new environment is incredibly powerful. You get to learn as the market evolves. So I spent almost 18 years on the trading floor till about 98 or 99. And what a wonderful experience. It was so interesting because, Chris, you mentioned the idea of learning collaboratively. The floor was unique. It was exciting, and it was lucrative. But what was great about it was you were surrounded by guys who did it very well and very poorly. So you could, you had the entire spectrum of skill and education in front of you, which was great. I think a great challenge for a lot of people, especially my cadre of traders, is when they moved from that environment off the floor. Everybody built what we used to call their bunker. So they go down to their basement, they throw up 30 monitors and try to replicate that collaborative sensory input of all the noise around you. I remember one guy was even selling software that when the ladder moved up and down, it would yell at greater increments, buying, just something to replicate that world. Now, it was a struggle because basically every trader was left alone with his thoughts, and it was a tough environment. Not a lot of guys made it through that really well. So the idea of being able to collaboratively work, whether what we do at Tastytrade or the way we're engaging with the small exchange in terms of building investment of understanding of product and getting people involved to not feel that they're alone in the woods, that there is someone with them on this journey, the way you take everyone on the journey to get them comfortable, get them moving forward. I always equate to traders are like sharks. If they're not moving forward, they're dying. And moving forward is you're learning new things, you're learning new products. We talk about product indifference and how important that is, whether it be futures or options or stocks. Being able to be proud. It doesn't mean we pack everything in. We don't have to understand 3,000 underlines of different scans, but we need to be comfortable adopting product and being able to look to the next iteration of how we increase our ability to trade in this market.
Yeah. Wow. You've got a lot there. So I appreciate that, Pete. When I was talking to Tony Batista and he was telling me about his time on the floor, did you guys ever connect? Was that how y'all got together?
No, he was the enemy. He was across the
Oh, okay.
When I say that, different exchange. Back then there were three exchanges, three trading floors. CME, or Chicago Mercantile Exchange, where I traded, the Chicago Board of Trade, where they traded primarily grains, and then the CBOE, or the Chicago Board Options Exchange. And each one of us, thought we were the catch me out. And so we never crossed paths. Actually, Tony spent a couple of years trading bonds at the Board of Trade. So those kind of two worlds never intersected until both exchanges went public and the CME ended up buying the Board of Trade. So now we see CME with these interest rate products, these grain products. It all seems as one, but CME was actually assembled from four different exchanges. The Board of Trade, which it bought, the NYMEX, which is all the energy products, crude, nat gas, and everything. And then the COMEX, which was all the metals product, gold, silver, platinum, and some soft commodities. So that all was assembled together, and they actually had melded the trading floors together. But at that point, I would say 90% of the business was migrated to electronic trading. The speed at which that happened, I think, was surprising for everyone. But if you think about what we want is a leveling of the playing field. And what electronic trading did was truly level the playing field. Everybody, if you think about it, I would stand in the DMARC pit and I want to trade crude oil. And I have to kind of battle my way through these 200 knuckleheads to get out, pick up a phone, put in an order, and then if it was busy in New York at NYMEX, I'd get a fill back 2 hours later with no certainty around where that would be filled. The ability now for us to basically glide our mouse across the platform and get into whatever we find interesting now is such an empowering thing. And it broadened the participant base dramatically. Whether it be individual or pension fund, asset manager, everyone had that direct access. So if you think about it, that speed, that cost efficiency, and that ease of access, probably took 6 to 7 years to fully migrate from 400 guys in the S&P pit to 40 guys in the S&P pit. But that evolution, once it started to gain ground, moved very quickly. So it was interesting to see, but it's so logical because traders like sharks have to move forward, products have to move forward and innovate, and we've seen that.
Yeah, hearing these stories of pits and people yelling orders and calling New York, and 2 hours later you getting a fill, things like that, I couldn't imagine. Like, I literally could not picture, other than like seeing it in trading places or something like that, what actually business was like in those days. Like, it just seems such a foreign concept to me that I would have to get on the phone, call somebody, have somebody physically walk their body over to a pit, throw some hand signs around, and a couple hours later find out if I did or didn't get filled and what price, right? It just seems so arcane. And that was obviously in your lifetime. That was not all that long ago.
It was, and it was incredibly exciting. You'd open those doors to go on the floor, and there were 3,000 guys spread out across, our CME trading floor at our heyday was actually 2 trading floors, one on top of each other, and was the largest unsupported structure in the United States. What I mean by unsupported structure was had no pillars in it. So there was complete visibility wherever you stood to see all the pricing boards. And you're right, you quickly picked up that unique language of buying and selling and using your hands to communicate. Now, out of those 3,000 people, we had at that time, I think 12 female traders. And I was fortunate enough to marry one of them. My wife, Michelle, ran a metals trading firm called Brody White and would fill orders in the pit. So I was, after numerous times asking her out and being rejected, I think she finally took pity on me and went out and was fortunate enough to marry her. But funny is that these hand signals we use, whether it be 100 or 10, we go to Costco now and she'll ask me, how many of those do we need? Now, I'll give her the 12 sign and she knows exactly what that means. So even now we still use some of that vernacular and funicular.
Yeah, that is hilarious. You are very fortunate to have found somebody in your field that can definitely talk your language in that case. Because my wife, she's a teacher. We met in college. And when I start talking numbers, it is the fastest glaze you have ever seen. It's like a glazed donut, right? As fast as possible. So that's really cool. She handles other things and I handle numbers. And she's like, I don't want to have to cross-pollinate these two. It's just not my thing here. But so
good
Pete,
separation of responsibilities. I know it tends to work the best.
Yeah, and we're definitely not stepping on each other's feet in that case. Yeah.
Cool.
So tell me how we ended up at the small exchange, right? We've come from pork bellies and cattle, and now what happened next?
Right. So the futures markets came into existence for price discovery. It was the ability of people producing a good who knew that we'll stick with our corn example. If I put corn in the ground in March and April, I know I'm harvesting it in October and November, but I have no idea what that price is going to be then. So how do I plan how much I plant and what do I invest in my crops? So the idea of price discovery was the driving need for futures markets. And as you would think, it started in the agricultural space, moved into the livestock space. When I first started, like I said, the foreign currencies were a very small amount of volume. What was the biggest thing traded on the CME floor at that time? Was live cattle futures. So the migration, though, of the global nature of financial markets quickly changed the evolution of U.S.-centric livestock futures into this world of financial futures. So what's interesting, though, Chris, is futures have been around for, depending on if you go back to the Japanese grain markets in 1785, but I might be wrong there. But let's just call it the last 120 years in the United States. The evolution of product has been very, very quick. And what we've seen is financial products come to the forefront very quickly. But one of the things that's challenging is they didn't all come at once. It wasn't one day in the 80s that they decided to turn on Treasury bonds, notes in 2 years, and the dollar, the yen, Canada, and everything else. So what we ended up getting was kind of every product was built with its own end user in mind. So we look at the current world, and in the grain market, they're quoted as a fraction of a cent. In the bond market, they're fractions of a basis point. So, it's so funny to think in this world of decimalization and the elegance of the way stocks and options are presented in dollars and cents, you've got something that is quoted in fractions like bonds, 1/32. And the difference between ZB, a long bond that has a tick size of, here you go, $31.25. Think about the randomness of that compared to $15.62.5 for a note, or $6.25 for a 2-year. All these products build at certain points for a certain end user. So what you've got are futures, which in and of themselves are incredibly capitally efficient products. Because it is, and for those of you who don't know about futures, the difference between equities and options in the world of futures are, futures by their name are contracts, not underlines, but contracts for future delivery. Because they are contracts between it's between the exchange to the counterparty. But since they're contracts for futures delivery, there's a different margining system. It's called span margining. And what it does is, let you control a lot of product for a very small amount of capital. It's leverage. Now, Chris, you and I both know leverage is sometimes looked at it as this pejorative thing. It's scary, but it's also very positive. It enhances your return on capital. So you've got these large products that are built for institutions that have this tremendous capital efficiency, but sometimes, to a great extent, don't fit where you and I want to be. The world of equity indexes, NASDAQ right now is a $210,000 contract.
Wow.
The gold contract, $200,000
Wow.
in notional. Now, you're to control that $200,000 of gold, you're posting collateral or margin of about $7,000. So you think about that. Boy, unlike Reg T GLD, where you're posting 50%, you're getting tremendous capital efficiency using futures, but you're compelled to consume that at a very large size. So it's like I love the return on capital. I like the ability to deploy. We're all constrained by a number of things, and one of them, it used to be access. That's been broken down, and it's a level playing field. Now we're all constrained by capital. So where can I use my capital most effectively? Increase my number of occurrences. Have a truly diversified portfolio. So all these pieces play in. When you go into the world of traditional institutionally sized futures, that's where you get the mismatch. I can only trade gold at 200,000 a clip. So that means every one lot I buy, I am so overweight exposure into that particular future. Even if I'm using less capital than 100 shares of GLD, I've still got a very dramatic mismatch of exposure. So the small exchange went to look at some of these issues we just talked about. The non-uniformity of products. And what I mean by that is the different tick sizes, the different ways they're quoted, the different expirations. Now, we talked about futures contracts. By nature, the term future, it expires at some point in time. Sometimes they're physically settled, which means you make or take delivery. Sometimes they're cash settled, which just means when they expire, you get a debit or credit, and they come off the books. So I think both you and I, just thinking about that now, which would I rather have? And it's very, if you're trading crude, you're not going to get 1,000 barrels of oil. A guy's not going to pull up and say, hey, where do I park this in your basement?
Listen, I live in Texas. It could happen. You never know, right?
There you go. Absolutely. But, that physical delivery piece is daunting. It's intimidating. So let's take that out of the equation. Let's make cash settled products, which we did at the small exchange. Let's make them at a size that makes sense. So all of our indexes are cash settled. They're all quoted just like an equity or an ETF, 2 decimal points to the right. So it's like, okay, this makes sense. Every tick is $1. So whether you're trading energy or metals or the equity index, every 1 point increment, every minimum movement is $1. So it's uniform. When they built the options, equity options, they really did it right. They made everything standardized. 100 shares quoted in that dollars and cents. It made perfect sense. It made it easy for people to adopt. We want to make futures now that easy. So we've made them small. We've made them simple. Everything expires on the same day, the third Friday of the month at 3 o'clock. If you open up a futures expiration calendar now, you will literally see something different expiring every day of the month. Now and you look at expiration schedules. Now, some like the equity indexes are quarterly. That makes sense, every 90 days. You look at things like gold and silver, it's Feb, April, June, and August, then December. It's like, where did they pick these random months and why don't they all align? Well, again, it's the evolution of product. Is it confusing? Absolutely. We always say we want to have you take your ideas to execution. And what we mean by that at the small exchange is we don't want you to have to spend voluminous amounts of time learning about the product, understanding its nuanced difference, what a tick means. Is it $10 in gold? Is it $25 in silver? Or like we talked about, $31 in bonds. Make it all simple, make it all standard, and make it all uniform. And that's what we've done at the small exchange.
Okay. There's a lot to unpack there.
Yeah, sorry.
No, it's okay.
Should have
You probably
spaced
saw
that
me
out.
looking away because I'm writing down notes like, oh, I have a question about this. I have a question about that. Okay, perfect. Okay, so my
I'll
first
start
question.
breathing and let you answer some questions. Thanks, my friend.
No, I like to let the guests talk. I'm certainly not one of those people who's going to interrupt you as you go. I want you to finish your thoughts here. So, all right. So we have all these different products like gold, like bonds, like equities, like pork bellies, etc. So you were saying those were built at like different times for different reasons, right? So that's probably why they are different sizes and different expirations. Who came up with the reasoning for that, right? Like who decided today I need well, we'll talk about orange juice futures since they're gone now, right? Who decided we needed orange juice futures and then
Actually, the
decided we
orange
didn't need
juice,
those anymore?
yeah, they're still there.
Oh, they are. I thought they were gone. Okay.
They trade about 500 contracts a day on a busy day. Now, it's a very wide, very thin market to trade. It certainly would be the last place I would suggest somebody to go and start their futures journey. I remember back when I was on the floor, these pits were usually populated by a large amount of traders, very active. And we traded something called random length lumber. So there was a lumber future, and you could think about it. Builders want to know the price of plywood. The guys growing the trees want to get a sense of what they can sell them. There were 4 guys in that pit, and they did about 800 contracts a day. And when you walk by, you were thinking, "Oh, lumber's moving a lot. Maybe I'll step in there." The looks you got from those guys told you, "Don't come in. You're not welcome, nor will you." Or is there opportunity? Orange juice, a little bit of the same thing. A very small market, something you probably one of the last spots you want to be able to start your career. But you mentioned that. So as markets evolve, as products evolve at different points in time, there is a need for either a physical contract, like you mentioned, like cattle or hogs or orange juice. And I mean, it's interesting because the evolution, Chris, there are things that have gone away. Scrap steel, turkeys. They traded shrimp at one time. So things that had kind of an interest and then not a sustainable nature to them. As our markets grew in the 70s and 80s, we moved off the gold standard in the United States. That's where floating currencies came into trade and became such an important instrument. The U.S. government started issuing debt. Treasury futures became very interesting. So you can see as our U.S.-based economy grew and evolved and matured, and then our global expansion grew, evolved, and occurred, there was a need for different products. As that price discovery need came forward, products came forward.
That makes sense. Okay. So these products that were built, they were never intended for retail investors, right? They were always intended for institutions or like a body that would need like to know the price of hogs or whatever in the future, right? Like a farmer, I guess you could say.
Yeah, a farmer or the end user, the other guy on the other side of the equation who is buying the grain and processing it into bread, is processing it into corn syrup. And that was your anchor tenant, so to speak, is the two ends of the barbell, the user and the producer. And then you had a little bit of market maker and people looking to assume risk, not people looking to, the guys at the end of the barbell were looking to put risk off. So they were looking to add certainty, whether it was the price of the good they were buying or the price of the good they were selling. So they had to transfer that risk to someone. And that would be where the risk taker, the speculator would come in and participate. But it really wasn't a world built for retail self-directed trading.
So that's where my question was leading, right? So it's not built for retail. They're humongous position sizes. They're inconsistent with everything essentially about them, right? Yes. How did retail investors get to it, right? Because now I'm thinking about the Market Wizards books, which I don't know if you've had a chance to read them, right? You probably are friends with half of them. How did these people even, how did they get to the point where they're like, I don't want to talk about stocks anymore. I want to talk about equity futures, right? How did we get to the point where a retail, or, I mean, you could think of it like a Market Wizard being a retail, but I'm sure that they had different levels, being money managers. But how did we get to a point where retail investors could actually access those markets? It seems like it'd be prohibitive in so many different ways.
Well, you know what, to a great extent, Chris, it was. It was challenging because retail, when business was done on the floor, I stood in the pit and every trade I made was instant. As you said, the entire marketplace was matched where I stood. So you instantaneously know what you bought and sold. Now, I also wore the other coat, so to speak, when I was trading a product off our floor and talking about waiting 2 hours to get a fill back. So those kind of barriers made it very difficult for retail to trade. Also, the firms made it challenging for retail to trade, requiring a lot of capital to trade these products because of the leverage and the idea that there is a propensity for overcommitting to positions and all the troubling mechanics that come with that. So there's always been this interest by retail. They see the benefits of capital efficiency. They see, one of the futures do so many things well, but what's great is they give you pure product exposure. I want exposure to the precious metals. I don't want a minor. Now, we know we can look at GDX or GDXJ, and does it have a correlation to gold? Absolutely. But we also know, too, that depending on what equities are doing, some days it can wear gold as its suit. Some days it can wear equities as its suit. And what I mean is that there's not consistent or pure exposure. Futures do that very well. So that's a great way to diversify out of your equity-centric world of trading. But it, again, comes with that challenge of this very large size that you're trying to consume or put in. So that has always been a struggle where retail has come in, and the time that it takes an individual to learn a product, get comfortable with it, and put it into practice. Because I think, Chris, we all know we can learn by watching, but we probably all learn better by doing.
Oh yeah, for sure.
We can put the paper trade on and we don't look for 3 days and whatever it is, it's, oh, look, I made some money, or I'm going to wait for it to turn around. When those dollars and cents are real and moving on the screen, very different set of comfort. So I think that challenge was that the ability to adopt product became very difficult because you weren't given enough time to learn. You tended to burn through your capital because, when we learn, we tend not to hit the ground with positive P&L. There's a back and forth in terms of getting product comfortable into your trading toolbox. The challenge with what we had was that very attractive, pure product exposure, all these great things about future, but it came with this very expensive price tag, and that made it difficult to adopt.
Right. That makes sense. Okay. So now we've come out of the dark ages, right? We're using computers to trade, and now we've got the small exchange, right? So now let's say, because I've never traded futures. And I was telling Pete before our show today, this is a realm I'm not familiar with, so he'll probably be teaching me a lot. I mean, I love options. I am in equities and options all day, every day. That's my bread and butter, as I tell people. But I've been leery to get into futures because of so many of the things that you've talked about, right? I understand the notional risk is so much more. I understand the leverage is so much greater, right? And let's say I put on one gold trade and gold's been exploding lately, but let's say I decided I'm going to pick the top and then I'm wrong. Like, how long until my account is just gone, right? So that all of those things put together have been the reason why I have not traded futures, which it sounds like that is the reason why the small exchange was made, for the accessibility, for the ease of learning, for dipping into it without breaking anything, and especially the uniformity of it. That makes things a lot easier to understand. So how do we trade these, Pete, right? I have a Tastyworks account, and I definitely recommend people do the same. In fact, I have a few free bonuses for you as well. If you want to go to trytastyworks.com, that's my webpage that I put together with the help of the team at Tastyworks, and I will give you a ton of bonuses. And all you got to do is create a free account. Doesn't get much easier than that.
Yeah, that sounds great.
Yeah, but how are we going to trade these, Pete, right? Like, let's say I pop open my Tastyworks platform. Literally, I have no idea how to do this, right? I'm typing in GLD, I'm typing in SPY, I'm typing in SPX. How do I get to a small exchange product? I don't know. I'm not even trying to fake it here. I just don't know.
So a couple of things. You can go You can start with going to smallexchange.com to learn more about the products, learn more about what the offering is. And there's tons of educational content about the products, both static and video. We do a live broadcast twice a day. So we want to be a vested partner with participants in terms of getting comfortable within the product. So on Tastyworks, it couldn't be easier. All futures start with a /. So you go in and you can either look at the pre-made watch list, which they have just for small futures. So you can go over and just drag down and you'll see the small futures products and the cash indices they're built on. So it's very simple, very straightforward. And really, you just bring up that product just like you would any other product, /SM75 for our equity index, /SPRE. And it's like, well, that's precious metals. And one of the things we wanted to do, Chris, was just not copy someone else's products. We didn't want to make tiny CME products. Very frankly, if CME wants to do that, they can. We wanted to create products that resonated with our demographic, that would resonate for you and I. So precious metals, our precious metals index is a combination of gold, silver, and platinum. So truly holistic precious metals exposure. And I think you follow the markets closely. You know, depending on the day, it's gold that could be up 3% or silver that could be up 6 or 7% that we saw a couple of times last week. So you get the stock picker's dilemma sometimes. I want to be long precious metals, but geez, I picked the wrong one today. I bought gold. I can't buy both gold and silver. It's just too expensive. It's too much exposure. I picked the wrong one. So how can I make it easy? We feel we made it easy with /SPRE. I want to be long or short precious metals. Simple expression of opinion, all packed into one single product. Just like our dollar index, /SFX, small's dollar index. It includes 7 currency pairs. So rather than figuring out, I want to be long euro today, or I want to be short yen tomorrow, and each of those is an expression of a currency against the dollar. So if I'm long euros and short dollars. And can I trade that? Sure, you could trade euros, yen, or sterling. Again, the dilemma, which one do I pick? I have an idea about the dollar. I want to make this simple. I think the dollar is going higher or lower. And again, that's in the world of these many currency pairs to trade. So let's give everyone a simple expression of, if I think the dollar is going higher, I buy the dollar index. I don't have to go through 7 currency pairs. Now, Chris, as I told you, I started my career in FX and I traded it for 20 years on the floor and then did arbitrage between the spot and futures markets. Currency pairs, trading euro against sterling, Canada against Aussie. Interesting trade, sure. But the complexity involved in those took me a long time to get comfortable with and is a challenge for people who don't trade full time, who are looking to enhance, who want to trade but can't spend that difficult amount of time trying to understand what am I actually doing when I trade euro sterling and remove the dollar component. Let's keep it simple. Let's keep the selection process easy and let's employ it. So right now we've got those 3 products, /SM75, our equity index product, which is comprised of 15 single names within 5 sectors. So we call it the small 75. Our small precious metals index, gold, silver, and platinum, and then the small dollar index. Now I got to tell you what's coming next down the pipe. We have some really cool product, but this one in particular I think is great. We talk about trading interest rates. Now, you and I and everyone lives in the world of rates in some way, whether that be our mortgage, our car loan, or student loan, everything's quoted in yield. And that's the way we understand interest rates as self-directed traders, pro-tail traders, and individuals. We're compelled, though, to trade the world of price. And what that means is if I think interest rates are going higher, I got to sell a bond. Now, just that inverse relationship is confusing. Then when you add duration and convexity to it, I've taught this on bond spreads on Tastyworks, and I feel each step that I take a 20-year and add a 10-year and create a yield curve trade with these different rates, it's almost like a comedian who's not hitting it at a comedy club and the audience keeps getting smaller and smaller, just because the lift is harder and harder to do. It is a lot for someone to consume and learn. So our product in interest rates is a 10-year US Treasury, but it's just quoted in yield. I think yields are going higher, I buy it. Right now, the 10 years at 52 basis points.
Ooh, I like that.
Isn't that
I
great?
can already see I like that. I
Yeah.
tell you what, Pete, that is super appealing to me because I had said 100 times at least. I describe this way all the time that bonds are priced, and I use the word wacky. Bonds are wacky in the way that they're priced.
Absolutely.
So if you buy the yield and the yield's going up, that makes things so much easier. I love that.
It does. And you know what? We'll have what they call different durations or knots on the curve. So if you want to trade short-term yield, because you have an opinion on the Fed, you can trade a 2-year note. If you want to trade a little bit longer, you can trade a 10-year note or a 30-year note. But all of them are still quoted as that index price with a $1 tick. Very simple, very easy. So again, I can take I've got an idea about the Fed. I've got an idea about inflation. Here's the product. Here's the expression of opinion. Boom. Easy to do. And that's in every product we build. We really go back and say, will this resonate in terms of simplicity? Can I take my ideas to execution quickly and easily?
Gotcha. Okay. So I have several follow-up questions. I'm all about questions. Can you buy and sell the same product? Not like at the same time, but like let's say I want to get short yield. Can I get short yield, or is that not? Okay.
No,
Just check.
Chris, that's a great question, because in the world of equities, we have some constraints. We know it's not what they call it a neutral security. A neutral security means I can buy or sell it as easily. There's a little bit more involved in short selling a stock. The uptick rule. Then there's the challenge of, you mentioned back and forth, pattern day trading rules. For a lot of us that constrain around $25,000 makes it difficult because we're constrained by the pattern day trading rules. In the world of futures, there's no pattern day trading.
Oh, I didn't know that. Okay.
Yeah, a truly neutral security, which means I can buy or sell it with equal ease and the same capital required to do so. No uptick rules. There's nothing that prevents me from expressing my opinion. So they are very easy in terms of adopting an opinion on either side and back and forth.
Gotcha. Oh, that's really cool. So Pete, I know that Tastytrade has talked for a long time about getting a seat on the exchange. And if the audience wants to go back and listen to the Tony Batista interview, he talked all about his career with getting seats and things like that. Now, obviously, I don't intend to drive up to Chicago, especially with a virus in between you and me, and sit somewhere around your office there in the small exchange. What is the seat, and what does it do for me as somebody who's heard about it, but I just don't even know what it is?
Sure. So when and Tony and I, we had memberships on the exchange, which gave us privileges. And several of them were access to the trading floor. So we could go into where the pit was, preferential fees. We had very dramatically reduced fees. It truly was a business at that point where you're really, once you either owned your membership or you leased it, your only cost of doing business was your trading coat and the cards you had in your pocket. It was really easy to do. So how can we bring that to empower our retail audience, our active trader base? So what we have is a subscription. It is not, when we talk about membership, it often confers ownership. Now, our subscription doesn't confer ownership in the exchange, but what it does do is like what we used to have as professional traders. It cuts our exchange fees in half. So you can buy a lifetime subscription for a one-time fee. Now, wherever you go in your journey, if you change brokerages, if you move on to trade differently, that lifetime subscription goes with you. So you get half off of small exchange fees. Now, there are no market data fees right now. One of the challenges in the current world where it's a bit monopolistic. So CME and ICE, who are the two major players in the futures arena right now, charge a lot for market data. They have gotten to the point where they can't because there's no competition out there. Yeah. We want to be the guys that change that. So, for us, even not defined as a professional user, which market data fees are almost $400 a month, it's still $30, $40, or $50 a month. Now, you add that up and you think, oh my God, I'm having to make $500 just to start my journey for a year. And that's a lot to take on. So let's lower those barriers. That's what we wanted to do. So there are no market data fees. You can look at our feeds in real time, and there's no 2-week trial, and then you have to pay for them. They're free. At some point, we'll probably want to take that from revenue negative to revenue neutral. So there'll be a small fee attached to it. But as a subscriber, you have half off your exchange fees, and when and if they come, half off your market data fees.
Okay, that makes a lot of sense.
Yeah, no renewal, no anything. One-time fee. Our CEO, Donnie Roberts, says, it's kind of like if you go out to dinner and buy a bottle of wine. That's basically what you're paying for a lifetime of reduced fees and reduced market data fees.
Gotcha. So I know all about fees. Let me tell you. So on my Tastyworks account, I have a commercial account there that I trade through, and I think it's like $150 a month for the privilege of like live quotes. Mm-hmm. And I was like, I will take delayed quotes and save $150 a month. I mean, I'll figure out how to get around that 15 minutes of delayed quotes, and it's worked fine. But that was my first thought is, geez, just because I went from a retail account to a commercial account, like the whole world changed. So I know all about that.
And Chris, isn't it funny that the guy, it's truly a paradox, because the guys who are actually making those prices, you and I, who are making the trades, tend to pay the most to see our own prices. Now, we're seeing the world's prices, but that paradox is something that needs to be fixed. And that's something we want to disrupt, because it doesn't make any sense. You know what? Everybody should be able to see prices and be able to trade. So that is something that we really feel is going to be disruptive within the industry.
Very cool. So back to fees. Let's say like, I mean, there was a race to zero not too long ago, right? Where everybody's now stock trades are free basically everywhere. Option trades have not had quite the race to zero, but I know Tastyworks does a great job of that, which is one of the reasons I started using them back in the day. I was like, when they were, teasing the whole thing, when Tastyworks was coming, I was like fighting to get in. I think that was like 2015, right? I was just like, I got to get this ASAP. But it's $1 to open and $0 to close, and you're maxed out on, isn't it like 10, what am I trying to say? $10 per leg max.
Right.
So,
correct.
I mean, just right there, right? You throw a few contracts around and it gets real cheap real fast.
It does.
Yeah.
And, on the future side, so we felt, again, we had to lower those barriers. So to trade a futures contract, it is from the exchange side, it's 15 cents. If you're a subscriber, it's 7 cents.
Wow.
So when we think about, and then Tastytrade has a fee on top of that. It is the lowest fee in the industry, though. So I am as a small exchange officer, I'm not promoting any particular brokerage. We've made the exchange accessible to a very broad audience of participants. You can go from interactive brokers or trade event or any number of places to facilitate your smallest trading. But we're all sensitive. The more we trade, the more that cost becomes an issue, and we want to be in a spot where it's effective. So from the exchange side, we went back and we looked at, okay, we have futures. They have this tremendous capital efficiency. How can we price it as effectively as possible? And we did. So basis, smaller size futures should demand a smaller cost. So our costs for execution going across the globe of futures prices are the lowest in the world.
That sounds basically like free, like we were just talking about a second ago. Well, Pete, this has been so enlightening. I have learned a million things here today. I hope the audience has as well. And so, like I said, head on over to trytastyworks.com to get your free bonuses and open your account. You can start trading these. Pete was saying that you can trade these small exchange products on a lot of platforms. Are we on everybody yet, or getting there?
We're getting there. It's a work of, it's always a work in progress, adding participants. But
right.
in terms of the retail community, there's a great swath. And honestly, if your broker doesn't offer them, reach out and let them know.
Get a new broker. Let's just do that instead.
I like that. And if you want to learn more about the subscription or the exchange, the smallexchange.com is a great place to go. There's great content. What's great? Our product pages are one page. And you think, well, is that enough? Because I'm used to looking at a product page In the world of bonds, like you mentioned, that's 12 pages long and very confusing. You walk out exhausted. No, the product should be simple enough to consume in a single page read. So you're going to find that elegance and simplicity running all through our site.
Very cool. Well, I tell you what, the simplicity of it really has me excited because, as I mentioned earlier, that was my number one obstacle, right? I just spent years learning how to trade options. I got to do that all over again to trade futures. Jeez.
You're absolutely, you know what? We all weigh that lift. We want to adopt a new product, but we know there's a cost. That cost is not only financial, but it's time and effort. And what am I going to get for my time and effort? Well, we want to give you a product that has all these great benefits, all this simplicity, and also, on average, moves about $80 a day. So we've taken out, and you mentioned, that gold move recently. I think we breached $2,000 very early this morning, and we've just sold off appreciably. But that's a $2,500 move in a matter of, geez, Chris, 4 hours that we've been talking. We've been
talking 4 hours? I've lost track of time here, Pete.
Well, since 4 in the morning. Sorry about that. So that's a tough move to swallow, right or wrong. You know what? The idea that let's get these futures to fit in the world we have proportionally, then we can adopt them. We can substitute them. We get all the benefits without having to be overwhelmed by these products. And that's our goal. So at $80 to $100 a day, I often call it my sleep at night trade because, you know what? I always get this question when I was building, whether working at Tastytrade or in my previous life, how in the world can you leave these positions on at night? How can you? I need to stay up all night. And trust me, I've tried that, and it doesn't lead to a good outcome. Nobody can do that. So what you need to do is either not have that angst overnight, or have a product that you know is in a comfortable range. So whatever it gets, you keep your idea, and you know that whether it's right or wrong, it's not going to overwhelm you when you wake up in the morning. That's empowering.
It is, yeah, absolutely. Just yesterday, somebody put on social media, describe good trading in 3 words. And my 3 words was sleep easy tonight. So completely agree with you.
I've written a short guide on how you can use the triple stock profit system. It's the secret weapon every investor needs right now to change your financial future. And you can get it for free by visiting triplestockprofits.com or in the links below. Also, if you want to join a community of traders just like you can get free access to the elite membership that has even more resources to help you trade faster and trade smarter.
Well, Pete, this has been a really, really great conversation. Thank you so much for your time and for going through everything in such detail. I really am very flattered to be able to take your time in this way and share this with everybody.
Chris, thanks so much for having me on. I can't tell you, this was really a treat for me also. I do appreciate it.
Oh man, the pleasure is all mine. So thank you so much. And thank you guys for tuning into today's How to Trade Stocks Options podcast. And now futures too, it sounds like. Make sure you like, subscribe, and enable notifications. That way you never miss every, what do I say now? I've totally lost my train of thought here, Pete. Tools, tips, and tricks to help you trade faster and trade smarter. And I'll see you next week.